This video is for a little bit more experienced investors, and you have options on how you want to finance or fund the property that you're going to convert into a co-living project. Now, you have to think about two things. One is going to be how are you going to fund it? What makes the most sense? And then two is what formulas are you basing your returns on and what's important to you? Are you going to factor in the internal rate of return, which is like your 5-year pro forma, and you're factoring in the 4 quadrants of all your real estate benefits like appreciation, depreciation, et cetera, et cetera? Or are you factoring mostly on the cash flow and you're focused on your cash on cash return and want to get the best cash flow for your money possible? Now, if you are focused on your best cash on cash return, you got to look at how much cash is actually going into the project. Now, there's also 2 ways to think about that. The more cash you use, it also can take more time because you are trying to get off-market properties that are going to give you better deals, but you're going to have to put more cash into the project. So let's break this down. You get a good deal. It's typically going to be an off-market property. You're working with like a wholesaler or a deal finder of some sort. You got to be ready to move, and you have to be a little bit more experienced because you have to put hard money down that's non-refundable. You have to move quick. You got to lock it up before anyone else, because if it's a good deal, there's other buyers out there, and you have to buy it cash. Now, cash doesn't mean all your money. You can use OTM, other people's money, but you got to be prepared for that and know how that works, and you're paying higher interest for that. So that is a experienced investor's ball game right there, like really experienced, because they're planning to fix it up, refinance it, and turn it into a better deal for them because they want instant equity. But they're using a lot more cash, and it is riskier because they're using higher interest, and it's probably higher days on market before it goes live. So just remember to factor that in when you're trying to get a really good deal. Well, if you don't have that experience and you don't have those connections yet, a great thing about co-living is that you can still cash flow really, really good with a retail property, which means it's an on-market property right off the MLS. You don't always have a lot of competition because you're not looking for the same type of a house that your typical retail buyer is going after. You have all these boxes to check. And as you're checking those boxes, like how many rooms can I fit in this house, you're not actually caring about certain things that other retail buyers care about, like, is it next to a busy street? Most people would hate that. In a co-living experience, that could actually be a good thing if it's close to public transit. So you just have a different perspective. So you can still get pretty good deals on the MLS. And here's the kicker. They're going to be much closer to going live. The time on market, your holding costs are going to be less, and your construction costs are going to be less. As an investor, you do have to put at least 20% down on that property, but it's going to be actually potentially a better return because it's less cash down. So all you're paying for is your down payment, which is going to be at least 20%. And then you're going to put the construction cost for how much it's going to cost you to put up walls and some doors and reconfigure the house so you can get the most bedrooms possible. So it's really about how can you plan for the most bedrooms in the current space, in the current layout, to get you the best NOI which is going to get you the best ROI on your project. So you have to think through that. Do you want to go cash, all cash, and go off market, or do you want to go less cash, quicker to market, probably just as good or even better cash on cash ROI, but you don't necessarily have the equity that you would if you got an off market deal? If you have any other questions about this, we can break it down a lot further. I actually have an even better strategy, especially if you're a newer investor, and you are planning a little bit ahead. There's an amazing way to do this, and it trumps all of these ideas. Let's go.